Good morning, everybody, and very welcome. Tuesday, 31st of August 2021, the last webinar of the month, the first webinar of the new week, and tomorrow it is September. Welcome anyway. As you can see, we're looking at a blank daily chart, and I have prepared lots for you all today. Good morning, George. Good morning, everyone. Thank you all for joining. Good numbers in today. I think you'll like this one. I do indeed. I've prepared lots of notes, so I'll begin with those, and then we'll dive right in to exactly why it is we're looking at a blank chart today. Just for the purpose of everybody, just so everyone knows, I'm recording this one. Yes, it will be posted on YouTube. I will make this one public, hence we're looking at a blank chart for the moment anyway. Now, feedback. Feedback needs to be timeless if you want or need any help or guidance with your plans of any nature in your trading. Too late, often I hear the results of the wheels falling off. Sometimes I hear it even from a third party, and I'm sworn to not tell the person for whom the red mist or confusion has descended. Later then, and in one particular case, more than a year later, the individual may tell, he may not tell me, he fessed up to his or her partner and has done something rather silly. Not much I can do by then, really. Damage caused and problems aplenty. Up to us all to make use of this amazing facility we have here in the WhatsApp group, in our trading group of traders. I can only ask, but as I've said many times in the past, we can lead the horse to the water, but we can't make it drink. The facilities exist for reasons. Traders make money from trading. Some of them, myself included, are nothing special, no different to any other regular Mr. Average person on the planet, really. What does it take then for a man to change? I know we can, as people, change. Sometimes lots, and sometimes only a small change is what's needed to make a difference. Remember, we've discussed the whole 1% improvement per day thing, not necessarily improvement in pip count, but in your attitude towards the process and the individual tasks involved. I'm halfway through this and I haven't done a sound check. If anyone wants to type up on the chat there, let me know my sound's okay. Sorry for that. We have a simple, nice one, thanks George. We have a simple 3-step process and a strength meter for step 3. Once memorized, it becomes much easier to see the 3 steps on a chart. I'm happy to admit it will make a huge difference if you've taken the time to learn to spot those steps. Thanks, Michael. Divergence, rejection of a line, and then a signal, all of which are documented carefully in the steps in the process doc. We perhaps need to consider the 4 horses chapters in the second book I wrote, and everyone has access to it. I know you haven't all read it, but it is there. Ideally, we need another single sheet document giving steps in the I stuffed it all up somehow, what do I do now process. Ideally, it would begin with 3 strikes, ? And it might go on to say make the call, ! Send a text at least. In fact, make the call should probably be italics, bold, and ! With maybe 2 or 3 of those. Send a text at least, but don't delay. If you had a fire in the house or the engine bay of your car, would you wait a while and finish your breakfast perhaps before calling the fire brigade? I'd need that explaining to me carefully in order that I could ever understand the delay. I've faced emergency situations many times, myself personally. Never once did I sit back and think about delaying the steps needed to rectify or eliminate the danger. Sometimes I made the wrong step first, and sometimes, yes, I made the danger worse first. But never did I sit back and do nothing. Always I acted and reacted, and I made efforts to rectify. You think this is different? Somehow trading for a living doesn't deliver danger? If it becomes your sole source of income, and you let it all go, including any savings you might have amassed, what then? What, a job? Work? Oh, I don't think so. Now is it important enough to react upon? Why wait? Why not just improve your process by a small 1% margin each day, even when you think you're perfect? I don't think I'm perfect. I try to improve by 1% each day, at least each week. I just try to improve. I don't really try to measure it anymore. I just try to get better and better and better. That's the reality and the truth of the matter. So if you can increase a small 1% margin each day and continually to look to improve how you do what it is that we do. Too many traders, in fact, too many people generally lose their way in life, not only in trading. It's a sad fact. It's a true fact, but sad. This webinar then is a back to basics reminder of the fundamental rules that drive our success as traders. At least and for sure, they drive my success as a trader and as a coach by simply reinforcing this consistent three-step process. Divergence, was or is there any? Rejection of a line, has price done that? Signal, we have one? What strength does it carry on our meter? And I refer you all to that steps in the process document. Also today, I want to talk about patterns. Who amongst us takes the time to look up at the sky at night? Well, I know a lot of you do. I've seen some of your photos, especially you guys in Australia there. Beautiful. Anyway, what, a chaotic mess of stars? The human mind is well accustomed to looking for and analysing patterns. You think not? Well, think about a doctor, a policeman, a detective type policeman, a dentist. They're looking at patterns and they're looking for things that are not right, things that are not in order, not the way they should be, evidence of whatever it might be, an illness, a crime, a tooth decay, because I mentioned dentist. We are accustomed to looking for patterns. Zoom out a bit, well, I suppose a lot really, and suddenly there are patterns clearly identified in the stars repeating themselves over and over, possibly or probably in a unique kind of Fibonacci way. For sure, many of the patterns we see here on our own planet are Fibonacci based. Snail shells, petals, branches, etc. Until we go pruning things, of course. And then we look at charts and we can make a choice. And choice here should be italiced and bolded and underlined and everything, and pointed out that you're making a choice when we look at a chart. You can dive in and hope because you had no patience, consistency or discipline perhaps, or you can sit back and observe the patterns, the divergence, rejection and the signal with a tried and tested, very valid strength meter to boot. This is the difference our cherry picking makes. The difference between becoming a versatile professional trader and an average wannabe. We're going to look now at a top-down analysis and how it could be alarmed even to guide you in more accurately picking your cherries. Now that's my sermon for the day. I typed that up last week after speaking to one or two people. Here then is a look at the charts. And what have we got? We've got the euro dollar on a 1-day chart. And we're blessed to have Tommy. Are you with us, Tommy? Let me just scroll down and have a look. Tommy is on, yes. I want to thank Tommy for the YouTube video he shared on the group for the higher time frame analysis. It is much appreciated. It sort of gets me out of a little task on Monday evening. So thank you, Tommy, and thanks for saying thanks. That's what's the word? It is appreciated anyway. I always appreciate it when any member of the group, and several have recently, puts anything on the group that is helpful to everybody. Obviously, Paul's 2 a.m. price was hit this morning, and George took advantage of that. And Dan put on the things yesterday about the Heikinashi, etc., etc. Ian, the OHLC. That's what the group is for. That's why we benefit. But here, Let's begin and look at this chart. It's a 1-day chart and without any indicators on it whatsoever. What are the tells? Well, right away we can see, oh look, we came to this line here and we paused. We broke below it, we broke above it, we paused. We come back below it, we come back towards it and we stopped. We dropped further away, we're coming back towards this line here, this line here. Okay, that's without any analysis on the screen. Now, everyone on this live webinar knows all of my favorite, let's say, higher value EMAs. So let's pop them back to visibility first. There they are. There's all of our favorite higher value EMAs. And let's have a look now. Why did we stop here? Well, it doesn't take a blind man's dog can see why we stopped there. There are 2 or 3 reasons. One is this higher value EMA. We hit it, we stopped, and then oh look, isn't that sort of it's a bit miniature, but it's either train tracks or it's tweezer bottoms. And then we get this price action breakout. And from that moment in time, from that exact moment in time where that price breaks above that level right there, basically the high of those 2 bars, price is going to go north. Where to? Well, maybe to this line, maybe to that line, which, well, it's there now. And maybe because these 2 lines have crossed, maybe it's only a pullback. Maybe. We don't care. We deal in high probability. And the probability is, well, the fact is, we've rejected a line. Was there divergence? Well, was there? Oh, look, ladies and gentlemen, oh, look, do we have divergence? Yes, we do. We have lower lows over higher lows. So we've got LL at the top, we've got HL at the bottom, and everyone amongst you watching this video would know that you have access to a little map that gives you that. What's that then? It's that, isn't it? That's fact. And that there then becomes high probability and low risk. That's what it is. It's high probability and low risk. And that is all that as traders we can have access to. You want more? You need more convincing? Well, let's carry on analysing. We broke above that little line without any indicators on the chart, and we went up. Where did we go? Did we reject a line? Well, let's have a look. Oh, look, ladies and gentlemen, there is a line. Are we rejecting the line? We appear to be rejecting the line, don't we? There's a close on it, an open, and then all the opens and closes are below, significantly below this line. It's one of our favourite lines. Hang on 1 second, Dave, and then ask a question. Then we've got lower highs over higher highs. So we've got L, H over H, and every one of you watching this video or watching this webinar knows that lower highs over higher highs equals an arrow down, and that's all. Clear all drawings. Go on, fire away with your question. Yes, this is a 1-day chart. We're doing a top-down analysis. If you listened a moment ago, I said we're going to look now at a top-down analysis and how it could be alarmed to guide you in more accurately picking your cherries. So you're correct.
Okay.
Go on, Dave, go on.
Yeah, so my question is, and I'm sure other people are thinking this because I look at the chart and see it right away. So where it's going up now, you said like those tweezers or those railway tracks.
Yeah.
Instead of there, if you go back to the previous low, so we haven't seen that low there around the 28th, 25th, whatever. Yeah, that one there where your mouse pointer is.
Yeah.
So right there you still have the bearish divergence. You have the double bottoms there. You have the breakout. Oh yeah, sorry, bullish divergence.
Yeah.
And you have that green candle, which broke the high of the previous candle. The inside bar breakout and all that. So
yeah,
is that a legitimate entry there as well,
Yes,
although it would have
yes,
been,
absolutely.
yep.
But let's have a look at it. And brilliant, I'm glad you asked. Remember, I referred in the sermon about patterns. Okay, so that's bullish divergence. We know we've still got bullish divergence there with lower lows over higher lows as at there. Yes, and we do get a move up and we test a higher value EMA. And if we were trading an intraday pattern, we've got an inside bar, a breakout above the inside bar, and absolutely reasons to buy it. But we know that this line being below zero is still bearish. It's still bearish here, absolutely. Remember the patterns sermon? What is that? What is that? What is that? Who's going to tell me what that is as a pattern? Let's put them on just on their own. What is that as a pattern? Anyone? Anyone? Go on, someone type it up. No, that's it, Steve. Head and shoulders. It's an inverse shoulder, head. There you go. Kevin's got it perfectly. Inverse, head and shoulders. That's what it is. So you know when you take that initial buy, whatever time frame you take it on, that you've got an inverse head and shoulders, and this isn't going far. This isn't the big move. Then you get the rejection below the line, you can sell it again. Then you get the bounce off the line, you can buy it. You got a first target. You've got to lock in something there. Then it comes to the shoulder, the breakout, and you can buy it again to the next target, which is this line right here. That's analysis. That's really using your loaf and analyzing everything that you've got. Now remember I said,
Okay.
go on, go on.
If you're at that point there and you're buying that, you don't see the inverse head and shoulders. You only see the two lines touching the bottom there,
But you see
on
the
the like the
potential,
10th,
surely.
whatever.
Surely you
Just
see the
like you would see the
potential. Yeah.
potential over back around June 21st, 22nd. You have a, yeah, or
See, hang
like
on a
early. I mean,
minute.
there's a
As
couple.
because as at there, what you've got before you get that, you've got X, A, B, C potential for a W, but C is lower than A, isn't it? So is D going to be any higher than X? Not potentially not. No. Maybe this is your target. Maybe that's your target. Then that needs more analysis, and that's fine. No problem. Go on, carry on. For sorry for interrupting, but analysis using my accounting head. Analysis is always an as at kind of fact and factor. So as at now, what is it? You know what I mean? And as at
As at
now,
now,
okay,
yes, you see the
hindsight, it's
W, but
obviously it's an inverse head and shoulders now, which means if we break the neckline, yes, it could go on higher, it could do all these wonderful things then, but we've got to get through the pink line, the red line, and the purple line first.
yeah, that is true. I'm just thinking there we had that with my point there in time where you have that big green, that breakout bar after the inside bar.
Yeah.
At that point, you could have an X, an A, and a B, but again, you don't know how high that's going to go. You don't know if it's going to, if the C leg is going to be
Don't we?
higher or lower, and you don't see.
What's
No,
what's this
no,
line
not
here?
there, not there.
Oh, go
No,
on.
no, not there. Back to your left, that green breakout bar there.
Yeah.
So if you were to get in the entry here with that MA, at that point there, you ignore everything to the right because that hasn't happened yet. You
Yes.
don't know. You don't see the head and shoulders. If you look ahead, maybe if you could say, okay, the
Okay.
pattern
Look
could
at
go
this
this way
line
or the
here.
pattern
Is
could
he
go the other way.
significant? This line here, is he significant to you?
Yes, and he
So
closed above that line. So
that's it.
my
No, but look,
first
here's the
initial
thing.
inclination would be that it's going.
Here's the thing. There's your entry. Yeah, breakout above the
Yep.
inside bar. So once it closes above this line, what is your trade
hmm
management telling you to do with your stop loss?
Lock in tight.
Well, lock in at that line. So you're out, and that's fine. But you're out with whatever money is there. Yeah,
Yeah.
that's
Okay.
your
So
money.
yeah, yeah. Yep. So my
Okay.
point though was that, yeah, that's fine. It's just my point that I was trying to get across, like with other people here, is at that point you don't know what the pattern it is that it's forming the rest of the way. You don't know that that's an inverse head and shoulders
Oh,
to be able to say, oh,
absolutely,
it's going to come back.
absolutely. Yeah, hindsight's 2020. But what you do know, as at then, and if we did that so that that's all we have, during that bar, as at now, we know that's a breakout, so that's a buy. Once
Yes.
it closes above that line, that's our lock in because that could be a teacup at this stage. It could be a bullish
Yes.
fractal, it
Yes.
could carry on, it could be any, yeah, absolutely, absolutely. But
Yes.
the
Sorry, that's
high
the point I was trying to get
probability
across.
right thing to do is to LTFI, lock in right there on the line. Because tomorrow is promised to no one. The next bar is promised to no one. So we lock in at the line. And then what? and then we're out. Okay, now we're out, and because of the breakout of the inside bar, we're back in selling again, and we're selling. That's our first target, gets there, and okay, hits the money. Maybe we you've made a choice here. You either took the money or you've locked in, and because it didn't go through, your lock in has to be at the high of that bar, so you're out there, and now you can buy it. And that's it. It's always an as at right now. And for everyone, who's watching, always your analysis is as at now, what do I know? And it's the same as a detective, as a doctor, as a dentist, as a lawyer, as a driver. You're proceeding along the road. As at now, what do I know? There's nothing in front of me. There's no traffic lights. There's no speed cameras. I can keep my foot on the gas and keep going. Oh, there's a stop street in the distance. There's a stop street in the distance. What must I do? Ease off the gas depending on the proximity to the stop street. Sound fair? I'm gonna assume that's a yeah. But yeah.
Oh, sorry, I didn't know you're
Yeah,
waiting for me. Yeah. That's all sounds fair. I
cool.
just wanted to make that point. Yep.
No
Cool.
worries. Thanks, Dave. Perfect. Happy days. So there's our daily. Now, remember I said we could alarm all of this. Well, if we put a 1 period EMA on there, if we change that bar chart to a line chart, we'll see that a 1 period EMA is completely hidden by the price. Why? Because a 1 EMA is a line chart, basically. So here's what I want to do for you. I'm going to go back to a bar chart and leave the 1 EMA on there. And I'm going to tell you that for the second that that bar went below, this guy only touches the closes. The 1 EMA only shows you the closes in hindsight. But on a live chart, the 1 AM did drop below this bronze line here, which we all know is a 610 EMA. Fib numbers, they're all fib numbers. It is what it is. So what does that tell us? It tells us that we could alarm that. How could we alarm it? We all know about alarms. If we went over here and said, add our alarms and give me an alarm, please. Tell me when an indicator. What indicator? Tell me when the exponential moving average on a 1-day chart crosses over an indicator. What indicator? Well, give me an EMA, another EMA. Oh, EMA 5. EMA, got to change the EMA 5 up here to an EMA 1. Done. Tab, and he doesn't really need to be that thick, but it is what it is. I'll go save as default. There you go. Done. Now, cross over another indicator. There's my EMA1. Tell me when the EMA1 on the daily crosses over. Oh, and I don't really want a core, do I? I do want to change that to my EU. E/U. Where are you? Euro, dollar. Oh, bother. I may do it properly, or someone's going to say, oh, you didn't do it, stuff me up. Euro, USD. You're still a little bit off screen, aren't you? You would have to be awkward. Euro, dollar. Exponential moving average again, exponential moving average, and we can pick a number here. We can tell it on, which one. We're going to set them all up, basically. I'm not going to set them all up in this webinar, but I'm sure going to tell you how to set each and every one up. We got to be 1 day, 1 day, 1 day. Tell me when a 1 EMA crosses over a well, pick your number on here. Period 1, 55, 144. Let's go with the 55, the pink line. And he can be saved as default. Doesn't matter. Tell me when they cross. I don't want it to be that thick. Save as default, right? Tell me when the 1 crosses the 55. Just when it crosses over. That way I get it going up and I get it going down. Okay? So I've got a 1 crossing a 55 and he hasn't saved my 55. I sometimes need to do it on my phone. There you go. Save as default. Click on the chart. He isn't saving it, but you can see where I'm going with this. That's because I defaulted it. I need to do it on my phone. We'll leave him there and we'll say not on the closed bar. We don't want to trigger on the closed bar. You're really giving me jip with this one, aren't you? Create. Anyway, it isn't. You can see it hasn't saved the right settings on there. If I go into him and I go edit alarm condition, to actually make him work, I'd have to do him on my phone because this is not an Apple machine. So here's what I'm going to do. While you're all listening, I'm going to quickly log in on my phone, and I'm going to look for that alarm and I'm going to change it, and then we're going to carry on with our top-down analysis because I really want you to see how strong this can be. I'm going in there, edit alarm condition, EMA the first one, EMA the second one, exponential moving average period. Like for some reason I can't click on the end of that. Oh, aren't you great and awkward there? Gotcha. And say done, and say done, and we say modify. Send alarm, trigger on close bar, no. Now you see that change when I go in there now, edit alarm condition. Now it's a 1 over a 55, and that's what I want. I'm going to cancel the modify there. So I will get an alarm when it happens on the daily. Great. I also want one. I'm going to get rid of these alarms. I'd want one, your chosen instrument. I'm looking at euro dollar here. But there's the 1 day. Let's go down to a 4 hour. There's a 4 hour. So I'd get a crossover, I'd get a crossover, a crossover, a crossover, a crossover. We can clearly see it's above and holding above now and working its way up through the ranks. We know where divergence is. We can see the divergence, we can see rejection of lines. We can set the same alarm, so we've got a 1 day, a 4 hour, we can set it on a 1 hour and have a look. Oh look, now the EMAs look more significant. We know about our very significant one right here, don't we? Of course we do. We know very much our significant higher value danger level, and look, we hit it, we rejected it, we came back to another significant EMA, we faffed around, and now we've gone through it. Great. These EMAs are, remember, one of our must obey setups. The higher value EMAs are a must obey, and we've broken through them and we're going for it. So we do a daily, a 4 hourly, a 1 hourly set of alarms, not one alarm. One for that line, 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 and one for that line. 6 alarms per time frame. Yes, that means 6 by 1, 2, 3, 4. 4 sixes, 24 alarms. Set them up. Make the difference. Now what are we looking at? On a 15-minute, drilling down. Accounting terminology, drill down. Are we looking to buy or are we looking to sell? Well, if we look at the picture from a daily, are we looking to buy or are we looking to sell? That's what we're asking the question. Are we looking to buy or are we looking to sell? That's the question we're asking. Are we looking to buy or are we looking to sell? Well, that's the question. Are we looking to buy or are we looking to sell? That's the question. And then we can drill right down to our trigger time frame and say, okay, yeah, we would have bought and banked. Why? Because we just hit the stop street. That's it. And yes, we can still have our Camarilla levels in play, be they on I've set the daily ones up on here, so they're set to a monthly. But there is a brief, if you like, top-down analysis. And at the beginning of this all, I said, okay, my chosen instrument here is euro dollar, but you can use this on any you like. There's the US 30, there's a top-down analysis. We could drill right down from daily, 4 hour, 15 minute, 1 hour, 15 minute, 1 minute if you like. You'll see the same thing. You'll see divergence, you'll see rejection of a line, and you'll see a signal. That's what you'll see. Always, it's the same pattern. Where's the divergence? It's higher lows over lower lows. We've rejected the line and there's a signal, and that's it. And when you drill down into the lower time frames, that's what you're going to find. So I'm not even going to bother. I'm going to look at the J30 for a moment, because some time ago, and for all, I called this target 17711. 17711 on the J30, I said, is a doable target. And I've called some outlandish targets on the US 30. They all went there. Yeah, okay, they went there via stuff, but they went there. We hit the 35,000. We hit the 28,657. We're going to hit the 17,711. I can't tell you the when, but I believe in 17,711. Why? Well, let's look at it. X, A, B, C higher than A, D. We're in a W. We're in a bullish W. That's it, with bullish convergence and price in buy mode. And if we do the top-down analysis on the DAX, it's in buy mode. You either bought it or you didn't. We're struggling now around R4, but let's do the 4 hours. And let's go in him and tell it, okay, you're on a monthly, let's go weekly for the 4 hourly and see, okay, 16,000 looks doable now, doesn't it? We got an inside bar on the 4 hourly. Again, look at all the divergence and rejection of lines on our must obey levels. Look at it all, even when there's convergence and hoppers and signals and all of those wonderful things. And let's carry on down, shall we? 4 hours down to 1 hour. Well, do we have divergence? Higher lows, lower lows, rejection of a line, and you know there's a signal, and off we go. And then when we drill down still further, the 15-minute, it's the same story. Divergent rejection of a line signal, it's the same story. Let's drill down still further into the 1 minute, and let's go and change these into the day now, so that we know that we're comparing full on apples with apples. Where are we? Why are we battling at this line? Oh, because R5 is there. That's why we're battling at this line. Alrighty then. Suddenly, when you drill down and you ask the same question, should I buy or should I sell? You get an answer, and it's the right answer. Should I buy? Yes. Should I buy? Potentially, but it's not guaranteed to you. Why? Because we've rejected that line now once, twice, 3 times, 4 times, 5, 6 times maybe. We're rejecting this R5. This line, this R5 is a tough line. So if you buy that one, you better wait for the significant reasons and wait for the higher probability, lower risk trades. Or, yeah, you can just dive in. Why not dive in before dipping your toe? Yeah, of course, that water might not be sulfuric acid, might it? Look before you leap, we say. And when you look before you leap, oh, look, there you go. There was obvious reason to wait. An inside bar was forming. We've rejected that line, how many times did I say? And suddenly we drop through this pink line. Because it's not a hopper, is it? The hopper was back there. There was a right time. There is a dangerous time. You choose your time. It's the right time, or you leave it alone. That's all. Let's do some more analysis on different things. There's a GBP dollar. If I'm still looking at a 1 minute here, I haven't even drilled down. But divergence, rejection of lines, signals, higher highs, lower highs, signals with hoppers. What's the problem? Really, what's the problem? We can scroll down. I know someone was looking at a Bitcoin some time ago. There's a Bitcoin. Oh, look, ladies and gentlemen, it couldn't be more obvious, could it? Well, it could, I suppose. I think some people sometimes need an actual telling, as in, hey, push the button there, because so many people wait until they're late, and leaky late entries are then killing you. That's the reality. But the patterns are over and over. The divergence, the rejection of a line, the signal, it's over and over. It's very repetitive. It's very boring at this stage for the majority of sensible traders. Oh, look, a big round number. Is that a higher high I see before me over a lower high I see before me? What, and you didn't see that drop coming, no? The 48,000 down to 47,925 or so, 75 pips. Is that 750 pips? Oh, me holy mother. 750 pips, and you didn't see that coming? Of course you did. Of course, it is 750 pips, isn't it? No, I don't know. I'm losing me maths here. I'm losing me sanity. It's either 75 or 750 because I need me fingers to count that kind of stuff. And therein, that's only 75, sorry. Therein lies my point. You do not need to be clever to trade. I always just assume on Bitcoin that it's a big, big number, and of course it's not in this case, only 75 pips. Only 75 pips. Divergence, rejection of a line. Only. At worst case here, you were in a buy and you took the money because you saw divergence, rejection of a line, and you'd locked in below the high, and that's it. You took the money, and you took the better part of the money because you saw divergence and the rejection of a line. Rejection of a line. You saw the rejection of a big round number right there. Well, hopefully you did. And the divergence. The higher high over the lower high. We can look at the line. In this case, it's right there. Or that is lower than that one. It's there. Higher highs, lower highs, rejection of a line. So the market we've proved, or the instrument, if you like, we've proved, doesn't matter. There's a dollar yen. Oh, look, ladies and gentlemen, divergence, higher highs, lower highs, rejection of a line, signal. You know, it for me, it couldn't be any clearer. So I'm really drumming in this DRS, divergence, rejection of a line, signal. I'm drumming it in. Why? Well, because it works. It works beautifully. It works well. It works fantastically. It doesn't matter what market. It doesn't matter US 30, J30, FTSE, UK 100. Doesn't matter. Oh, look, did we have anything before that? Did we have a DRS? There was. Oh, go on. Of course you can. Yeah. Go on. Ask the question.
Okay, on the previous couple of charts, I know some people are confused by this. When you were showing the divergence, you were showing higher highs over lower highs with like the histogram, and
Yeah.
then on another time you were using the actual MACD and signal lines for the divergence versus the price action. So
Yeah.
can you explain why you're using both or looking at both, or it doesn't matter just as long as you see divergence on one or the other, just to kind of clarify why
Yeah, oh,
sometimes you're.
absolutely, and it's a good question. Excellent. Remember, we talk about divergence within the indicator. So you can see divergence from the lines, or from the indicator, or from both. You can. And we've looked at, we looked at a TSI, and the TSI are these lines, and we looked at an OSMA, and an OSMA is this histogram, and that's fine. They're just, what's the word? Alternative indicators based on the same kind of settings. Oh, excuse me. I do think that sometimes the people who make indicators say, oh, excuse me with this throat. There's nothing wrong with me, I promise. I've talked a lot. That oh, I'm going to make an indicator and I'm going to sell it. Yeah, because maybe they're not as good at trading, or maybe they find that that particular part of this particular indicator is really good, so they separate it out. So we're looking at the FTSE here, and we see a high that is lower than a high, and we see a high that is lower than a high, and great, that's convergence. Fine. I like looking at it with the histogram. Does it mean I can't see it with the line? No, it doesn't, because bear in mind, with our MT4, we've already set an indicator to alert us when there is divergence on the line. And if we look there, we've got lower highs over higher highs on the line of the MACD. So we've got a hopper signal to buy, then we've got rejection of a line, but we had the divergence anyway. So I look for divergence on both. The bottom line is simple. It's ABC. It's always be checking. And that's, I've never ever promoted that more strongly than right now. ABC, always be checking. When should you be checking for divergence? Always, during every single bar, every single bar, you should be checking for divergence. Michael asks, are you happy with divergence on, say, a TSI or an RSI? It depends, Michael, and I'll tell you for why. There has to be no ambiguity. And with an RSI, first of all, the fault finding chart, did you mess with it, or is it the standard RSI? The TSI, did you mess with it, or is it the standard TSI? And the problem is, if you messed with it, the divergence is no longer standard or consistent because you messed with it. You know what I mean? If you and I both buy a Mini Cooper, it's exactly the same model, exactly the same year. The registration numbers are exactly the same apart from one single digit because we both bought the same Mini. If we drive on the same road, is there a reason why you should be able to go faster than me? Or I should be able to go faster than you? No, there is no reason because we got the same car. right? But if you mess with yours, or if I mess with mine, maybe one of us lifted the hood and said, "Oh, that goes. I'm going to change that for this and this for that, and one of them, and I'm going to put that exhaust on there and do this and lower the suspension." Da, da, da. Suddenly, one of them will go faster than the other. Now we don't have a consistent base from which to measure, do we? So I like consistency when I look for divergence. That's why I look at a standard. Yeah, we mess with it. But when we look for divergence, we don't mess with the 9, do we? For anyone watching the recording, Michael wrote, but we mess with the MACD. We do. But the 9 at the end, look at the messing. Always the 9 is the 9, isn't it? Yeah? Give me a yes. The 9 is the 9. On all three settings on our MACD or TSI, the 9 is the 9. And the 9 is the difference between these two. And that means the histogram remain. Thank you for the thumbs up. That means that the histogram gives us divergence or convergence, and it remains the same. That's where we get our consistency from. We must have consistency, and it's the right thing to have. You know what I mean? There you go. I've had a sip of coffee, so my throat's good. So do we see divergence now on the US 30? Yes, we see lower lows over higher lows. What do we need to do? Well, if we were in this cell, we're rejecting R3. We need to either lock it in tight above that line right there or TTFM. You have a choice to make. Cheers, Michael. Thanks for that. That's it. We always have a choice. We can say, okay, yeah, I took the sell, I didn't take the sell, whatever. Or I'm looking to take the buy. If you're looking to take the buy, would I take the buy? No, it's far from being a hopper. I don't see a signal. All I have so far is divergence and rejection of a line. I'm not going to show our major signal today because I'm opening this webinar up to the public. I really just wanted to do this top-down analysis to say, what are the steps in the process? Divergence, rejection of a line, signal. That's it. Now that's really as difficult as it gets. It's a simple 3-step process, and then you should, as do I, be able to blow it out the bloody water day after day after day without a second thought, a second care in the world, and off you go. You know, that's it. We're getting green down here now, so and we're breaking above this, our significant, most dangerous EMA on screen. You know, it couldn't be clearer. As far as I'm concerned, it couldn't. It just couldn't. And now we've hit the first stop street. Will we go to the second stop street, or do we need to go, ooh, I need to lock in, or TTFM? You know, it's always obvious. And some people have had the courage or audacity, I don't know which, to say to me in the past, hindsight's 2020. Yes, it is indeed, absolutely. And anyone can trade to the left of the chart. You can, indeed. And what that means is basically there were a set of conditions that were met upon the chart. And when those conditions were met, you had a choice to make. Did you make the right choice or did you not make the right choice? That is it. So are you broken or do you work quite well, in fact? That's it. Set of conditions were met upon the chart. There was divergence, there was rejection of a line, and there was a signal. Did you make the right choice? Or did you think, oh, you know what, I'm going to wait for 50 seconds, 30 seconds, 20 seconds, 2.5 minutes, 4 minutes. Why? Because I'm a random dopey numpty that can. I can't think of any other excuse or sensible reason whatsoever, you know. And yes, the US 30 moves quite quickly, and we're looking at a dangerous market in the US 30. It's been described to me by somebody as the dirty 30. I'll give them that, but I don't see anything dirty here. I saw divergence, I saw rejection of a line, I saw a signal, I saw it go stop street, and you know, we're bouncing between lines like we would on a what you call it? What's that type of game called where you press the buttons on the side? Ping pong? No, not ping pong. Pinball wizard, that's it. There you go. The Dow, yeah, the US 30, pinball wizard. You need to be a bit of a pinball wizard with the US 30. But if we let's say, if we dumbed it down to something like this ever so tortoise like euro dollar here, well now, Did we have divergence? Yes. Did we have rejection of a line? Yes. Is there a pattern? Yes. Was there a signal? Yes. Did you push a button? No, James, I didn't push a button. Well, then, you're broken. Oh, yes, James, I did push a button. Well, then you made some money, didn't you? That's it. That's how we analyze and how we measure, because what gets measured gets managed. Remember, I was anyway, in a former life an accountant. I've also been a librarian. Would you believe, those of you who know, I'm not really academically, what's the word? I don't approve of the whole academics thing, really. I didn't go to university, and I feel sorry for those who did, including my children. And yes, I insisted they go. Doesn't mean I don't agree with university. It's just, for me, it was definitely not the right thing to do. I wasn't that kind of. We're not on about me. Yes, I was a librarian, I was an auditor, I did many things, many, 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 many things. I like the varied experience. I like that. I liked varied experience. Historian, someone once said to me, "You're not a psychologist, how do you know all this? And how are you right?" Well, I am a bit of a historian, yes. I'm very, very keen on history. I've read a lot about history, and I was interested in it. It is one of the things that interested me in school. Of course it did, people bashing each other over the heads with swords every in history. That's what we learned. And isn't that interesting? Of course it was interesting way back then. Yes, yes, that was interesting. And how is that important here? Well, because every single bar that's closed is now a historical bar. That's history. Oh, look, and there was price bashing its head on the line over divergence, higher highs over lower highs, and we reject the line. And suddenly price has been bashed back down. And that's it. It's just the same thing over and over and over again. And it is solidly boring, but it's great because it makes money in a boring and sensible kind of easy way. Really lower highs over higher highs and rejection of a couple of lines and a signal. Oh, boom. And why are we stalling now, James? Well, because there's a line there. Or did you not see that? You know what I mean? So always, 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 there is a reason to do something or there's not. And you either take the right choice, and you do the right thing, or you behave like a wannabe and a very naughty boy, basically, or as the history teacher says, have we rejected that line before? We have, history teacher, yes. Well, we're rejecting it again, so get ready, aim and fire, won't you? You know where the signals are, lads. You're all watching the video. I'm not spouting rubbish, or you'd be typing it up in the questions panel there by the dozen, wouldn't you? Or unmuting yourselves and yelling at me by the dozen. Hang on a minute, James, you said this and it's doing that. Well, it is what it is, lads, and it's doing what it does because it can't argue with what it's seeing right there and all. That's it. It's the same pattern over and over and over and over again and over. And that's it. Stop street, stop street, stop street, stop street, stop street, and we're just screwing around at stop streets. And why not? Why wouldn't we? Because they're there to be screwed around with. What have we got? Stop streets, a mess of them right there, but we rejected the line. We had lower lows over higher lows because we had divergence. We rejected a line, one of our most solid and dangerous and respected lines that we use in our webinars and on my trading sessions and what have you. And then we went north. Or what? We didn't see that coming? Of course we did. We did. Gold. What? We didn't see it all coming? Of course we did. We do. We can do the whole thing on gold. Oh look, divergence, lower lows over massively higher lows, rejection of a line, inside bar breakout. What's your problem? Really, really, when we look at a pattern like that, is that not it doesn't matter what market we're looking at. We're looking for the same pattern: divergence, rejection of a line, signal, divergence, rejection of a line, signal. It couldn't be clearer. It couldn't be more simple. It couldn't be more obvious. And yet, people don't look for them. Oh, look at that. There's a pretty pattern. What pattern's that, everybody? What pattern is it? Highlighted by that one, by the way. A teacup. Ooh, there's a teacup. Look, we go teacup, teacup, handle. Now what are we waiting for? Well, we're waiting for a bit of a MACD scalper pattern there and a bit of a break above this sort of R4 to know that yes, we are actually getting our teacup, which could turn into a head and shoulders, an inverse head and shoulders as well. If you said shoulder, head, shoulder, it could, But for the moment, I'm seeing a bit of a teacup there. Pretty too. And that's it. It doesn't matter what, so long as you carry out this kind of a top down analysis for yourself on your chosen instrument, then there is no way the market could catch you out. There isn't. Oh, look, did we reject a line? Are we rejecting a line at the moment? Yeah, resistance, support, resistance, support. You're interrogating the chart always. There's the teacup pattern, great. And why is it coming back now? Well, because we hit R4. For me anyway, generally, it couldn't be clearer. It absolutely is always crystal clear when I look at a chart what price is doing, why it's doing it, and where it's going next. That's it. It's crystal clear. Anyone have any doubts yet? We're entering the last 10 minutes. Has anyone got any questions, comments, thoughts, feedback, anything you want to fire away? I'm throwing this at you because I want you all to get this and get off of your, what's the word? Off of your sort of oh, hang on, I'm not doing well, I'm doing well, I'm not doing well, I'm doing well, I'm not doing well. Get off of that cycle and get onto this sort of, yeah, I'm doing consistently okay, we'll do initially, and then I'm doing consistently good, and then I'm doing consistently great. That's what I'm looking for. Or, make that sort of change, which is the 1% improvement each day, not to your pip count, but to the steps in the process and to your understanding of the steps in the process. That's what I'm really, really looking for. Because it's obvious. I see it all the time. You see it all the time. But for some reason, there's still a few of you that are not doing it. What are the signals that the price is coming out of range? Expanding Bollinger Bands, Andrew. Expanding Bollinger Bands and only those. You see expanding Bollinger Bands, price is coming out of range. You don't see expanding Bollinger Bands, it's not coming out of range. That's it. Sound fair? And if we remember our steps in the process document, remember the steps in the process document? The strength meter, expanding bands is one of the strengths. So you got 6 points, if you like, to give a trade. Is it a this? Is it a that? Has it done that? Has it done the other? Are the bands expanding? It's in there. It's a step in the process. Are the bands expanding or not? Is it a hopper or not? Have we rejected a line? Are the higher value EMAs set the right way? Do the higher time frames concur? All of those, the 6 things, isn't there? Is it a signal? Was there divergence? Well, first, is there divergence? Is there rejection of a line? Is there a signal? And then on the signal, there are 6 sort of measures. And it is, do you have a signal? Yeah. Is the higher value EMA is the right way round, the higher time frames the right way round, expanding bands, all of those wonderful things that are, as I say, right there in the steps in the process document. I think it's super duper helpful, but yeah, expanding bands will help you with the range. As will, the likes of these, thanks Tommy, thanks for that. Appreciate it. As will the proximity of pink and purple. They're the lower of our 2 higher value EMAs. Are they getting further apart or closer together? Or are they sort of weaving in and out of each other? The weave is a problem, but as they get closer together, more into range. As they get further apart, like that, yeah, further out of range. But closer together, not good. Further apart, very good. Thanks for that, Tommy. Tommy wrote, well done, James. Legend. Thanks. Thank you. Much appreciated. And I hope you heard me thanking you for your YouTube contribution as well. It is very much appreciated. If you got a fakey buy signal there, you rejected a line. It's a very high test bar. It's still in hopper mode. It's you're interrogating a chart, and it's giving you all, and I mean all of the answers that you need to make the right decisions all the time. The answers are right there before you. Will you listen, or will you, what, the car in front of you? How many times have you seen a rear end collision on the motorway? This is Ireland where I live, so we see it quite a lot here. There are a lot of bad drivers here in Ireland, and I'll tell you for why. I watch other drivers. I'm very careful at watching other people, and I'm usually very careful to not be carefully observed while I'm carefully observing. And the number of people I see looking down at their phones while they're driving, and sometimes I'm going the other way and I beep the horn and you see them leap, because, yeah, you weren't expecting that, were you? So you're looking at your phone, and I only beeped for a laugh. It's because I'm Liverpool. I'm from Liverpool and we play jokes on people. It's our way. So I beep at the people who are looking down at their phones and it makes me laugh. But how many times do you see a rear end collision? What, you didn't see the brake lights? You weren't looking through the guy's rear windscreen and his front windscreen to see the car in front, or the van in front with the high level brake lights. You didn't see all that coming, no? Kind of serves you right then if you hit one of them. You know what I mean? It's usually my view. And yeah, Kashid and I drove past an accident the other day, and this guy in a Mini had rolled through a stop street, and the front end of the Mini to the level whereby the driver's door was over the stop street. And then there was this Skoda something that had hit it and bounced over the other side of the road and half spun round. And I thought, well, you didn't stop at the stop street. It said stop. Stop, S-T-O-P, four-letter word. Very, very difficult to not understand that, isn't it? Stop. It doesn't say yield. That's a bigger word, yield. And some people won't understand the word yield. Yield, sir. Oh, it's from the nights, days of nights. No, it means give way. Oh, give way, yeah, okay. Yield. Stop is what, it doesn't mean yield, it means stop. Come to a complete standstill in your vehicle. Simple fault finding chart then. Did you? No, I didn't. And what, you got hit by that other car there, did you? Yeah. Well, it serves you right then. What? But he's broke my car? Yeah, well, it's your fault. You didn't stop at the stop street. And of course, then on the way back, three fire engines and big roadblocks, and we got to go the long way around to get home. Well, you bleeding Egypt. That's because you couldn't stop. Because you could what? You couldn't read the sign. It said stop, and you didn't. There's no grey area. There's no doubts. There's no arguments to be had. You're at fault. You didn't stop. Oh, look, Price stopped. It got to the stop street, and okay, it rolled over the line there, and it might have fake-keyed some. Shouldn't have fake-keyed any of mine. And then it went again, and there you go. Why shouldn't it have fake-keyed any of mine? Because we've got a fractal and we've got the line generally stayed above. You know what you're looking at here, ladies and gentlemen. You absolutely do. You know where things are going. You do know. You absolutely know. But do you trust it? Do you believe it? Maybe you fear that, well, I've made mistakes in the past, so maybe I'm going to make those mistakes again. And maybe you are. And who can stop you from making those mistakes? You. Only you. You can decide the next time you come to a stop street, you're actually going to stop at the stop street. The next time you drive your car, you're not going to use your phone. You're going to put the phone in your pocket, deep in your pocket, zip up the pocket, and then you're going to start driving. And if it bleeps, rings, farts, unless it goes on fire, you're not going to touch your phone while you're driving. That's it. Unless it gets very, very warm in your pocket and causes you to think, oh my lord, that phone is burning my leg or my breast or whatever pocket you've got it in, you're not touching the damn phone. That's it. Then you know you have discipline. And that's all you need. Discipline, patience, consistency. And then you're a professional, a versatile professional trader. Because you can look at any instrument over here, and that's the versatility. Professional, well, because you can look at the chart and it tells you what to do. Consistent, you did what it told you to do. That's it. Another simple three-step process. Do it, Don't do it. Do it, you'll make money. Don't do it, you're going to keep losing. That's the reality. That is the only choice. That is it. It's obvious. Now, we are 9:59. I'll open it for the last sort of seconds here to ask, is there any last minute tips, suggestions or questions, or do we close and do we upload the recording? And I will end by saying thank you all for your feedback. Thank you all for your questions. Thanks, Dave, for unmuting and asking yours. That was helpful. Much appreciated. Thanks, George. Appreciate that. I'll see you all on the next live session. Please, until then, trade safe. And if you need to, watch this recording twice, 3 times, I don't care. Watch it as often as it takes until it sinks in. Please trade safe. I'm going to stop the recording and say many thanks and bye to you all. Cheers, guys. See you on the next live webinar. Bye-bye.